Welcome back to Roxham TV, everyone, and great to have you with us today. We've got a packed show today, a lot to go through. So here's a rundown. We are starting with Elon Musk's massive move, a 1.2, like a $1.25 trillion merger between SpaceX and XAI that could reshape AI, space, and even capital markets ahead of a future IPO. And yes, there's a Bitcoin angle most people are missing. So we're going to dive into that as well. Then we'll talk about a viral AI tool that's freaking everybody out, not because it talks, but because it acts. It manages emails, trades money, and makes decisions on its own. The question is simple. Are we simply moving too fast? After that, we'll break down Disney's latest earnings, why theme parks are now doing all the heavy lifting, and what this times tells us about where real profits still are in this economy. We'll also cover a landmark trial against Meta, where prosecutors say Facebook and Instagram enabled child exploitation, a case that could change how big tech is held responsible. Then we head into crypto and Bitcoin, of course, starting with Abu Dhabi's new mining rules, a big signal about where global hash power and capital could be heading next. And finally, we wrapped up with Bitcoin technical analysis before bringing in our guest today, so Jeffrey Cho, to talk about Web3 regulation Hong Kong and where this space is really going next. So anyways, let's get started with our first news. So Elon Musk has just merged SpaceX and XAI into a single company. The combined value is $1.25 trillion. And the goal is quite, not gonna lie, it's quite bold, which is to build the future of AI from space. So let's break it down clearly, simply, and step by step. What just happened is Elon Musk announced that SpaceX has acquired XAI, merging the two into one private company. So SpaceX is valued at around $1 trillion, while XAI is valued at about $250 billion. So that makes this is the most valuable private company in the whole world. Elon Musk confirmed the deal in a statement on SpaceX website, and yes, an IPO is on the way and it is planned later in 2026. If that happens, it could be one of the biggest IPOs ever. So what Elon Musk is trying to build here, so Elon Musk said this creates a fully vertical integrated system. So that means Elon Musk has rockets, he has satellites, space-based internet, AI models, and real-time data. So all working together as one machine, both on Earth and also in orbit. His exact idea is simple but radical. AI needs massive amounts of power, and Elon Musk happened to believe that Earth won't be able to handle that. So Elon Musk's argument is this: within 2 to 3 years, the cheapest AI computing could happen in orbit. This is due to a few reasons. So first of all, like unlimited solar energy up in the orbit. There's no land constraints and also global coverage. SpaceX already runs Starlink, a huge satellite network. Now adds XAI's model, including Grok, on top of that network. All right, so the idea sounds cool and extremely futuristic, but let's do a little reality check now. XAI is burning around $1 billion a month. That's massive. So by folding XAI into SpaceX, Elon Musk solves a big problem. SpaceX has steady cash from Starlink subscriptions. They have launch revenue and strong investor demand. This still gives XAI funding stability and gives SpaceX an AI growth story ahead of its IPO. Of course, not everyone loves this move. Critics say this looks like a bailout for XAI. SpaceX core mission might also get distracted because of this. Like others worry XAI losses could weigh on SpaceX valuation. But many Elon supporters, like including myself, we see it very differently. AI and space are naturally coming together. Elon Musk has done this before with vertical integration, and SpaceX track record earns a lot of trust from investor. And this could really unlock like an entirely new industry. The headline was like AI from space, but behind the scenes, something else just like resurfaced as well. Um, Here comes the Bitcoin that SpaceX owns. So SpaceX is estimated to hold about 8,300 BTC on the balance sheet. At today's value, that is around like $650 million. Now, compared to $1 trillion valuation, of course, this is nothing. This is definitely not huge. But for accounting, disclosure, and investor optics, it does matter a lot, especially once IPO prep starts. So right now, like why we're looking into SpaceX Bitcoin holdings. So right now, SpaceX is a private company. That means it doesn't have to show Bitcoin gains or losses every single quarter. But once a company moves toward going public, that changes. Bitcoin volatility starts showing up in earnings, even if the company doesn't sell a single coin. And we have seen this before. So Tesla, of course, is one of the largest public Bitcoin holders. And during past Bitcoin crashes, Tesla booked hundreds of millions of dollars in paper losses, not because it sold Bitcoin, just because accounting rules force it to mark prices down. That's a risk SpaceX could face as it moves closer to an IPO. So, by merging SpaceX and XAI together, crypto exposure becomes more centralized inside the Elon Musk empire. You now have Tesla, so Tesla, a major public Bitcoin holder, SpaceX hold a large private Bitcoin holder, and XAI now part of the same structure. So that concentration matters when investors start digging into the numbers. Like either way, this is not just a tech story like AI on space. This is a capital market story, power story, and a glimpse into how the next trillion-dollar empires might be built. So we'll be watching this very closely here on Roxham TV. Moving on to the next news. So this is one of the biggest AI stories right now. A new AI tool is going viral around the world. And unlike chatbots, this one acts on its own. It can manage emails, trade stocks, or schedule your life, and actually interact with other systems with very little human input. So this one, its name is OpenClaw, and it's triggering both hype and fear across the tech world. So let's break it down clearly, calmly, and word for word. Okay, so what is OpenClaw, or what does it actually do? So OpenClaw is what people are calling an agentic AI. That means it doesn't just answer questions like ChatGPT do. It actually takes real actions on your behalf. Users are letting it delete tons of like thousands of emails, reply to messages, book appointments, and move money around, and even trade a financial portfolio. So this isn't just a theory. People are actually using it right now. So the tool was originally launched under a different name, then it was rebranded and now is known as OpenClaw. It was built by an Austrian programmer, and the software is completely open source, which means anyone can use it, copy it, and build on top of it. That helped it spread really fast in the internet. So today, it runs on top of large AI models like ChatGPT or Claude, and it can be controlled through apps like WhatsApp and Telegram. Downloads are now in the hundreds of thousands. Many users are exploring OpenClaw in many aspects of their lives. So one trader said he gave the AI access to his portfolio. He let it trade nonstop, then watch it lose everything So that story alone made a lot of people stop and think. But undeniably speaking, this is still helping a lot of users with other stuff like this open claw is acting like an assistant in your life. Developers around the world are now building add-ons and integrations from Silicon Valley to China. There's even a companion platform where AI agents can post publicly. So the bots are debating philosophy, they are talking about identity and even questioning their own existence. That visibility is changing how people think about AI and why it is so scary. And security experts are deeply concerned, not only because this is extremely scary stuff, but to work properly, open cloud often needs access to your emails, to your passwords, financial accounts, and operating systems. So cybersecurity researchers call these a lethal bet. That means sensitive data exposure and really it could be like us human could be easily manipulated by AI moving forward, and the power to act on harmful comments. If something goes wrong, the damage can be real. Even OpenClaw's creators agrees to these type of danger, so this dangerous risk. So what he says is that this is still an experiment. It requires careful setup and it is not suitable for non-tech users, so non-technical users. Regulators and industry leaders are now debating what guardrails are needed and how fast. So clean takeaway for this story. OpenClaw shows where AI is going, not just thinking, but doing. So it's agentic AI. That power is, of course, exciting, but it can be very risky as well. The big question now is simple, how much control are people willing to give up to machines that can act on our own behalf? Because once AI has access, authority, and do everything autonomously, there's no easy undo button, and this is not, maybe it's not the future anymore. It's already here in front of our very eyes. Okay, so let's move on to the next news of today's. We also have Disney. So Disney just reported earnings and they beat expectations on both revenue and profit. But the real story is where the money is coming from, because it's not movies, it's not TV, it's actually theme parks. So let's break it down clearly and simply, line by line. So for the first quarter of fiscal 2026, Disney reported, so there's a earnings per share $1.63 adjusted. But the expectation is a 1.57, so it's better than the expectation from Wall Street. And when it comes to revenue, same thing happens. So total revenue is $25.98 billion, up 5% from a year ago, and that also beat Wall Street expectation. So on paper, this is looking like a strong quarter, right? But under the surface, one business stood out, which is the Disney parks. So Disney's experienced division, that's theme parks, resorts, or cruises, had its best quarter ever. Revenue hit $10 billion for the first time in history. That's up 7% year over year. Operating profit from parks rose to $3.31 billion. So in simple terms, parks are the cash machine right now. But why though? What's driving the Disney parks to boom so much? So in the US, park attendance rose slightly, but the biggest driver was spending. So guests spend more per visit. So either on tickets or on food or on merchandise, or basically international parks also grew, but at a much slower pace. So even with higher prices and tougher economy, people are still showing up at Disney parks and they are paying. Streaming, so Disney streaming also improved. Revenue from Disney's entertainment segment grew, but like this the streaming loss narrow a little bit. Disney has the reason why is because Disney has been cutting costs, raising prices, and pushing bundles. It's not the growth engine it once was, but it's no longer bleeding the way it did before. Now, here's where the tone changes. Because like Disney warned that the next quarter could be softer. They expect slower traffic at US parks, higher costs from new cruise launches, and expenses tied to new park openings overseas. Management also said profit growth this year will be weighted more towards the second half. So the outlook is positive, though it's not the smoothest. So let's hop on to how Disney stock is doing. So here is the DIS ticker symbol. Even with the earnings beat, Disney shares slip in early trading. So the past 5 days is down 6.32%. Is quite a lot consider their size. So here comes a few reasons why Disney still dipped. First of all, like the operating profit was lower compared to last year, and there's still uncertainty around leadership, and this also brings us to the elephant in the room. So Disney's board is getting closer to naming a successor for Bob Iger. So Bob Iger did not talk about succession on the earnings call, but reports say a decision could come very soon. Investors are watching this closely because Disney managed to turn around. Mostly is tied to Bob Iger's leadership at Disney, so the CEO of Disney. So here's what this quarter really tells us, just a key takeaway for this news. Like movies, of course, like no longer the core profit engine. TV is under a lot of pressure. Streaming is stabilizing, but not exploding. But experience-wise, like Disney theme parks, those can't be easily replaced. So that's why people are still showing up at Disney parks, and even AI cannot replace this. So Disney is no longer just an entertainment company. It is a tourism and experience giant. The company is stronger than it was a year ago, but like the transition when it comes to the CEO, like the leadership and cost pressure still matter a lot. And that will really reflect on the Disney stock price. So we'll take a short break for now, and coming back to you. We also have another tech giant going on trial, and the accusations are really severe. So do stay with us and we'll get back to you.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Thanks for sticking around. Thanks for sticking around with us. So we are now diving into the news of Meta. So this is one of the biggest legal tests big tech has faced in years. And here's what's happening. So Meta, the parent company of Facebook and Instagram, is heading into a landmark jury trial over claims that its platforms enabled child exploitation. So let's break it down what's happening. So a jury trial has just begun in New Mexico, and the accusations are really serious. State prosecutors say Meta turned its platform into what they call a marketplace for predators. Their core claim is simple. Meta knew exactly the children were being harmed and failed to stop it. The trial could last up to 7 weeks. So the key accusations include, prosecutors argue that Meta allowed unmoderated groups to operate, used product designs that helped predators find minors, and prioritized engagement and growth over safety. They say this wasn't an incident. They say Meta had warnings and chose not to act fast. So according to court filings, Meta internally estimate that around 100,000 children face online sexual harassment on its platform every single day. That number is expected to be central to the trial. Prosecutors also say they have chat logs showing users discussing how to lure minors, evidence from undercover operations, and records of how predators contacted children through Meta's apps. Meta, of course, is strongly denying these claims. The company says the accusations are misleading. It says it has spent years building safety boards, so that would include teen accounts, parental controls, AI moderation systems, and cooperation with law enforcement. Meta says it removes harmful content and works actively to protect young users. And here's what makes this trial so important. Judges have already refused to dismiss the case. They rejected Meta's arguments under free speech and Section 230 protections. The court ruled this case is not just about user content, it's about product design, internal decisions and whether Meta's systems made harm easier. So that's a big legal shift. The trial doesn't stand alone. It comes as tech companies face growing pressure worldwide over how the platforms affect children. Other lawsuits are already underway, including cases tied to mental health harms. So prosecutors say this is about accountability, not just for what users post, but for what platforms allow to happen. During the trial, prosecutors say play the deposit clips from senior Meta executives, show internal documents, and present evidence that ads appear next to sexualized content involving minors. That evidence could shape how the judges see the company's intent. So here we have a tweet from Elon Musk trolling the whole case. This was back in the day, so that was in November 2025. So Elon Musk said, so on Instagram or Facebook, misgendering a trans person resulted in an immediate ban, but trafficking child prostitution allowing 17 strikes. So yeah, I happen to agree with him. Maybe I'm just Elon's big fan. But here's the clean takeaway for this news. Meta is facing a trial that could redefine how tech companies are held responsible for real world harm on their platforms. This is no longer just about moderation. It's about design choices and whether growth was put ahead of safety. If prosecutors succeed, this could open the door to more lawsuits and tougher rules for the entire industry. So, of course, we'll be watching this very closely on Roxham TV. Right now, let's shift gears a little bit to Bitcoin because this one does matter, especially if you care about where crypto mining is heading next. So Abu Dhabi is proposing brand new rules for Bitcoin and crypto mining, and the message is key. So it's very clear. Mining is being treated as real infrastructure, not speculation. So let's break it down. What just happened is, ADGM, that stands for Abu Dhabi Global Market, they have released a new discussion paper on crypto mining. It officially opened a public consultation in January, and this is the first step toward a full regulatory framework. And the industry has until 20th of March 2026 to give feedback to and shape the final rules. Here's the key point, what you want to know. So ADGM is not treating mining as a financial service. Instead, they are treating it as a licensed commercial activity. So what does that mean? I'm glad you asked. That means mining is infrastructure, like data centers, like energy intensive industry, not exactly in the trading bracket or not in the speculation bracket. So that's a huge signal. The framework is technology neutral. So that means it applies to proof of work or proof of stake or any future consensus models. So this isn't just about Bitcoin. It's about crypto mining as a whole. ADGM is also setting clear expectations. Mining companies would need clear corporate structures, disclosure of who really owns the company, and strong internal controls. This is about making sure large mining operations are well run and not operating in the shadows. Regulations will be risk-based, so that means small operations would face lighter oversight, while the large one, so complex miners, would face more supervision. If a company is registered in ADGM but runs mining operations overseas somewhere else, so ADGM still expects headquarters level control. In other words, you can't just register in Abu Dhabi and ignore what happens abroad. This puts Abu Dhabi on the map as one of the most structured jurisdictions for crypto mining. It sends a message to miners. So if you want clarity, if you want long-term rules, and if you want regulatory certainty, come to Abu Dhabi. This is a place for you. This is an interesting place to look at. At a time when many countries are still confused, Abu Dhabi is laying down a clear framework. So who ADGM wants to hear from? So ADGM is inviting feedback from Bitcoin and crypto mining firms, global headquarters managing mining operations, and auditors and service firms. So this is actually not a closed door process. The industry is being asked to help write the rules. So this is what we like, and especially when it comes to Abu Dhabi, I feel like a lot of technology or they do have a more open mindset when it comes to new innovation and when it comes to tech. Anyway, speaking of Bitcoin, let's hop on to the charts for now. So, of course, we're just doing a quick rundown because we are doing price analysis every single day. I'm not going to lie, this is a bear market. So, I'm just showing what has happened compared to like 24 hours ago. And if you want deeper analysis, I'll advise you to go back to watch my previous streams. So Bitcoin right now is sitting at $78,000, actually close to $79,000. We're just like hovering around after a huge crash over the weekend. Of course, it's not just crypto, it's not just Bitcoin being affected, but the broader market as a whole, so stock market, gold and silver, they took a massive correction as well. So silver especially, like silver, it makes sense because silver had a parabolic move. So if we top on euphoria, it makes sense that correction is going to be larger. Like in comparison, the correction for Bitcoin is not as huge because we didn't see the euphoric stage. That's why the correction is not as huge. But anyways, right now for the daily, let's start with the shorter time frame, and then we're going to jump to weekly and then 2 weeks candles. Okay, so right now, one thing I like to pull out when I'm trading, because since we're looking at daily, so if you are more like a long-term investor, then just focus on a weekly or basically longer time frame. But like daily, I use it a lot for swing trading because I like to take a quick profit here and there. So one thing about this, so we have this tiny pump. This is not very significant, but like after this huge correction, it makes sense to reverse a little bit before we head lower. So I don't think this is the honest truth, and at least this is what the chart has been showing me. So I don't think this pump is going to be too significant. We do have huge resistance around $88,000, but like I do think we're going to reverse from here. Like it's not okay. Again, the pump is not going to be, the reversal is not going to be huge since we have huge resistance. So speaking of like the evidence why I think we're going to reverse slightly from here, like we have to focus on the cycle time frame. So the daily time frame up here at the bottom. So how it works is a little bit similar to RSI. So here is the 1 day cycle time frame and the bottom is the RSI. So 1 day cycle time frame, this one is really good for swing trading. So how you read this is really easy. So we have got like 20 and 80. So when this wave goes to 80, that means it's getting a little bit overheated. Maybe it's a good time to pull a short or maybe like sell, take a little bit of profit. And when it comes down, maybe it's a good time to enter the market. But point being, this is just a cycle time frame. So it focuses on a time frame, but it doesn't give you any idea of the what price it finds resistance, or maybe this price is a little bit too high. It only focuses on the cycle time frame. So if you want to know the price resistance, then we need to look at the charts and actually do a little bit of TA. So anyways, this cycle time frame, we have kind of bottomed out. So we dropped to 74K and right now it's reversing. So I doubt there's much strength for the reversal, but like for an entire wave like this cycle time frame to play out, it takes like 7 to 10 days. So that's why I'm saying that this is really good for swing traders and I find it really, really helpful using this indicator alone. So since this, we are bouncing back up, I do expect in the coming days, we're going to go a little bit higher, but like there's a huge resistance at $88,000. Well, okay, let me get into why. So for that matter, let's hop onto the weekly time frame. So weekly candles, and let's go ahead and bring out the EG Mega Cloud. So on the weekly, let's close the bear flag because we know it's a bear market and we've dropped below anyways. So on the EG Mega Cloud, the past week, we closed below the leading span B. Of course, this is another very, very bearish signal. So I don't know why people still call it a tiny correction. It's not a bear market. Okay, then you do you. Okay. So since we dropped below this weekly candle, and we happen to have huge resistance. So the leading span B is just sitting at 88.1K. So I would be really surprised if we get even close to 88K. Like I'll be more surprised if we manage to stay above, like have a weekly candle stay above 88K. But this is a price level that I'm watching. This is suggested by the EG Mega Cloud. And if we also pull out the 2 weeks, candle of Bitcoin, let's bring out the 50 SMA. So 50 SMA is being this, this blue line right here. So again, the past week, so on Monday, we have a fresh candle, which is right here. This is a 2-week candle. But like we had a massive crash for this 2 week, the prior week, prior 2 weeks. And the confirmation that we got from this 2-week candle is that we closed below this 50 SMA. That is another really, really bearish signal that I spotted from the 2 weeks. So if we happen to zoom in closer, one thing very interesting is that the 50 SMA for the 2 weeks candle is also lying at around 88, like 88K, so somewhere around that. That means there's going to be huge resistance around $88,000. So for the daily, it can have some relief rally because we did drop quite a lot over the weekend. So we're going to pump a little bit, and but I would say, okay, 84K, that is a huge resistance I'm eyeing, and I'll be extremely surprised if we manage to get to $88,000. That is horrible drawing, but like, yeah, you know what I mean? So, yeah, this is just what the charts have been telling us. And again, as I mentioned, if you want deeper analysis, just go and watch my previous shows because like more or less, this is a bear market. So we're going to take a short break. And when we come back, we'll be joined by Jeffrey Chu, Executive Director at Web3 Harbor and VP of Ecosystem for APAC at Hedera. We'll be talking about Hong Kong's Web3 strategy, real-world blockchain use cases, and where crypto, AI, and regulation are actually heading next. So don't go away, stick around, and we'll be right back.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin! Come on, little buddy! Bitcoin! I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index is collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
At the tone, please record your message.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to the show and thanks for waiting. Now, if you want to understand where Web3 is really going in Asia, not the hype, not the buzzwords, but real adoption, real policy, and real use cases, this is the conversation you want to hear. So, joining me here today is Jeffrey Chu. He is the executive director at Web3 Harbor and the VP of ecosystem for APAC at Hedera Foundation. So Jeffrey works directly with governments, enterprise, and builders across Hong Kong and the region, helping turn blockchain from an idea into something that actually works in the real world. We're going to talk about Hong Kong's Web3 blueprint, how TradFi and crypto are starting to merge, and what builders and investors should really be paying attention to next. So, Jeffrey, welcome to the show.
Thank you for having me. I just want to say one thing. With the Hedera ecosystem going through its changes, one of the major updates, and I'm very proud to announce that I've actually now moved over to Hashgraph, which is another ecosystem entity within the Hedera ecosystem, as the executive director there and leading the APAC and Asia growth story. So very excited. And the transition from many protocols, which have been focusing on grant giving activities, now shifting into more sustainable revenue generating services and product delivery. So really excited to be here. Thank you.
Yeah, so thanks for the clarification. So since this is your first time on the show, why don't we start with a little bit of background? So how did you get into Web3 and what pulled you away from TradFi in the first place?
Funny story. COVID was actually what did it. I think every situation you have different scenarios that give you a common baseline to kind of rethink what you're doing in your life. COVID was that time. At the specific point in which I moved from TradFi to crypto, I was leading artificial intelligence and analytics over at Cognizant, and really working with Hong Kong listed companies and even other companies in the region, figure out its digital transformation story when it comes to data analytics and the use of automation. I was very lucky enough to run into one of my really, really good friends and the long-term co-founder of the Toko platform, which we built together. I mean, he was the driving force behind it at DLA Piper. I was really focused on helping develop the product and bring it to market. Through that experience, I really got into the nitty-gritty of how to create tokenized assets in various different asset classes, from real estate to art to alternative assets. And eventually the platform itself even got licensed out of the UAE through Virtual Assets Regulatory Authority, in which the firm and PwC worked very closely with the VARA regulators to really shape up the regulatory framework. So that's actually how I got into crypto.
That's a great story. I mean, a lot of us got into crypto because of COVID, so thanks to that. So one thing I really want to ask is, since you kind of like pivot from TradFi to crypto, like, do you see if like there's any edge because you have that mindset of thinking that you train all these years from TradFi to crypto, or it's just like more or less you develop new skills on the crypto journey?
No, it has been extremely beneficial to have that background. One of my clients previously was a Hong Kong Stock Exchange. And being in a very, very traditional centralized exchange and really understanding how the data flows between the different core systems and basically how the markets really work with the various different the asset lifecycle. And then being able to see that and then seeing how crypto through first principles and especially DeFi primitives was trying to short circuit or optimize or even bypass a lot of these controls, as well as establish kind of operating frameworks. And then you kind of realize, oh, we kind of need this there for compliance, for regulatory certainty, for various different consumer protections. And having that in the back of your mind always, right, when you're developing new services, products, and whatnot on crypto rails, has been very, very helpful. And now, full circle, you fast forward 5 years from when I actually got into crypto. All of these different, let's say, perspectives and I would say, base principles when it comes to the traditional finance industry are really coming back to becoming the new first principles of transparency, compliance, and scalability. And so, like, long story short, it's been extremely helpful. Though I would say in the first 3.5 years of my experience, many of my peers were trying to understand exactly how to fit the compliance structure into it. But I think we figured it out now.
Yes, I mean, the evidence that we could pull is basically like TradFi is trying to get into crypto, and crypto is trying to do TradFi stuff as well. So, for example, Coinbase is trying to do tokenized stocks or tokenized gold, and same for a lot of crypto exchanges. So, I would say the line between TradFi and crypto is getting blurry as we are basically more mature assets. So, it seems that you have been building a lot of crypto projects, and basically you've been building in crypto for years. I know you are doing Web3 Harbor. In simple terms, like what is Web3 Harbor? You could share to our viewers, and basically what is Web3 Harbor trying to achieve for Hong Kong?
I'm really proud to be the executive director of Web3 Harbor. It is a organization that is built by members, led by members. The core, let's say, mandate initially of Web3 Harbor was to help elements of the Hong Kong government understand how to re-attract crypto companies who had migrated away during the first exodus between 2019 and 2020. Over that period of time, what led to basically consultations and discourse between how to make Hong Kong an attractive place for crypto companies to come back led to multiple different consultation activities from the policy and regulatory side. And so as the SFC and HKMA, we're looking at the ATP licensing regimes, as well as on the custody front, trying to understand VA dealing and OTC activities. Web3 Harbor really kind of came up to the forefront as a unified industry voice to highlight some of the private sector, basically priorities and considerations that would link up with a lot of what the public sector was trying to do on an annual basis when it came to coming up with either the chief executive's focus and its budget for the Hong Kong government, as well as how Hong Kong could really focus on becoming, the lead again, taking the pole position when it comes to digital assets and virtual assets in the region. And I love to say that, we started with active grassroots community engagement, where our members kind of led various different subcommittees, responses to consultations when it came to a lot of the policy units and the chief executive's policy unit, HKM and SFC, open consultations, and eventually led to one of our marquee deliverables, which is known as the Hong Kong Web3 Blueprint, led by our knowledge partner, PwC, as well as 50 different companies, both members and in the public domain, that contributed to coming up with a multi-point framework that focused on how Hong Kong can position itself and maintain its position as a virtual asset leader in the region. You fast forward a little bit, and post the launch of this blueprint, which came with a lot of acceptance and buzz and well read within the various different stakeholders in the industry, we were asked by elements of the Hong Kong government as well as the private sector to create the working groups that we had originally identified in the blueprint on how to take some of the initiatives forward. So we now have 5 very, very robust working groups covering everything from the centralized exchanges to the VATP participants to OTC and custodial players, from stablecoin issuers and then asset managers that are issuing RWAs, as well as our legal compliance and regulatory and supervisory technologies group. So I'm super excited to say that, fast forward over the last 3 years of Web3 Harbor being in existence, we've really matured into being the trust anchor when it comes to Hong Kong's policy and private sector commitments to the public sector priorities.
Yes, I mean, Hong Kong is actively trying to be a crypto hub, and not just in Asia, but on a global scale. And listening from you, one thing I learned is that a lot of Hong Kong regulations, so regulators in Hong Kong are trying to be more pro crypto. So as you mentioned, we have the licenses for exchanges, and here it comes like OTC as well. So from the past year experience, it sounds like you have been holding the hand of Hong Kong government and institutions and guide them towards the right direction. When I say right, it's like friendly regulation. So we need regulation in the crypto space for sure, but we need the regulation that is not stifling innovation in a way. So like for regular people, so for regular laymen and viewers for this channel, like what about some real world use cases? Because okay, like regulation and institutions, it might sound very far-fetched to everyday users. So is there any real use case or for blockchain? Because people hear blockchain a lot. It sounds like a buzzword, but like if you could share one real example where blockchain actually solved a real problem, what would that be?
Yeah, well, I'll just say that our effort and work together with elements of the Hong Kong government as well as the private sector is a collective activity, and so yes, I have the privilege and the opportunity to lead some of those initiatives head on. I do have to give credit to the entire team, which has expanded significantly at Web3 Harbor. We started with about 3 individuals when I first took on the role of executive director. We're now pushing between 20 to 25 individuals, both volunteer and direct participants across multiple different activities. So I'm very excited to actually give credit to those individuals as well. You can find them on our website, web3harbor.org, and learn more about our programs. Getting back to your question about or clarification about some of the use cases and best applications of blockchain. Look, I think when it comes from a financial services perspective, payments is definitely the most active and relevant use case. But payments come in multiple forms. Payments can be as simple as paying for goods and services. Payments can also be payments from business to business. Payments can also be from business to employee, for example. And depending on some of these specific use cases, if they're, let's say, cross-border or when there's a lot of risk involved, such as construction workers who are building projects that are funded through different structures like debt that have to be paid as the unit is being delivered. How can we solve some of this problems? And stablecoins in combination with invoice tokenization with other smart contracts together can allow for micropayments, could be structured in ways where it is not only compliant, but also give extra, let's say, flexibility to reduce risk and as well as give, for example, salary payments on a fractional basis based on milestone completions. That's something that normally doesn't really make sense because it's either too cost prohibitive or not the let's say an easy way to do it from a technology perspective. So these are just some of the more real life use cases when it comes to financial services use case based on payments. When it comes to another really interesting use case that I am quite interested and fond about is on the judiciary services side. For example, when you have a virtual asset and something happens to you, knock on wood, your will, if you have one, may indicate that your assets pass on to the next of kin. However, we all know that in the virtual asset space, it doesn't really work like that. If your Bitcoin or if your other crypto assets are placed in a cold wallet, it doesn't matter if you have a If you have a will that passes on your assets to the next of kin, it's just not technically feasible to actually transfer it or actually recoup it. And so these are some of the interesting use cases that we have where it's using smart contracts and using other technologies such as zero-knowledge cryptography and zero-knowledge proofs to allow multiple mixes of asset classes in current real-world situations to actually be able to disperse and transfer wealth when it comes to probate situations or even litigation. So these are some of the more interesting use cases, I would say, when it comes to payments, as well as a native virtual asset issue that can be solved with new technologies.
Yeah, those are really good examples. So you brought up basically the most popular reasons why people would use blockchain and crypto moving forward. So and other buzzword that a lot of people are talking about is AI. So do you see AI and blockchain eventually work together in the real world? And what are the potential use cases that everyday users could use AI and blockchain together moving forward?
Yeah, so look, I just came back from Davos, and last year the theme at Davos was agentic AI. It's gonna, transform the world, and we should be investing more capital and resourcing and time into it. This year, the conversation was purposeful AI, and specifically general use AI is great and has changed basically how people work, people live, and how people interact with systems and each other. But it hasn't really tipped that productivity scale to the point where many of the original kind of like hype was focused around. And so I think the obvious use case here is for if you believe, and I think we all do, that AI will be this very transformative productivity booster, then there's a very high chance that people will be working for AI, and AI will be generating economic activity that probably needs to pay its fair share in the form of taxation or in the form of dividends, royalties, from people to machine and machine to machine. And so I can only imagine a world in which composable data that's on chain, linked with these AI systems, to be the best way to manage all of these complex flows of both data usage, basically the enforcement of intellectual property, likeness, and the usage of agentic AI to do things such as buy airplane tickets that at the most optimal price. When you're delegating this control over to a machine, how do you do that? It's the best way from a compliance perspective is to have some form of identity infrastructure that allows something like this to happen, and that infrastructure has to be built on blockchain.
Yes, that makes a lot of sense. So a really good example that you brought out is agentic AI. So moving forward, I believe we're going to see a swarm of AI agents, and each of these AI agents will specialize in what they do. For example, one AI agent would specialize in writing a script, and then the other one would specialize in generating image for a thumbnail. Of course, I'm pulling example as a YouTuber. So this is the potential workflow that in the future agentic AIs could do. So all the AI agents would talk to each other, and they need to order a specific, I don't know, like a product from these AI agent, like even an image, it could be a product. But during that ordering, that's a process that, of course, that involved a fee. So that's why I personally think crypto would come in, maybe in the coming near 10 years, or when agentic AI gets more mature. So speaking of your personal experience from, okay, you just traveled back from Davos, and you are advising Hong Kong governments and also institutions. So you must know really well about the local culture here in Hong Kong. So I want the next segment of this interview, really want to dive deeper into the whole Hong Kong crypto scene and whole Hong Kong regulation scene. So what is Hong Kong doing right as a crypto Web3 hub? And what else is missing? Is it like talent or rules? Like basically, what is the pros and cons?
Yeah, I think Hong Kong, I'd give it to the regulators. Even though sometimes it can be a slow march, but at least we're all going to the right direction, in the right trajectory. Their deep focus on ensuring consumer protections, as well as making sure that the right systems that are existing in place are actually maintaining its ability to regulate the ecosystem. And then the deep focus in having the right supervisory and regulatory technologies to ensure a safe environment for the proliferation of these virtual assets. I think Hong Kong has done a fantastic job. That process is obviously backed by the open consultation frameworks that both the SFC and HKMA have very much engaged with. I'm also very excited to not only talk about our work with Web3 Harbor, but also by extension, our work with Global Digital Finance and in some elements, the GBBC, when it comes to responding back to open consultations, whether it's related to OTC, BA dealing, clarifications on some definitions, when it comes to the use of terms or the interpretation of specific terms. I think the fact that the Hong Kong government and its constituents are very open to having the private sector feed back into this process is very, very positive, just to say the least. And through our membership, really drives the engagement and the trust and transparency that we really need. The other part that I would say has been very amazing is the deep integration into the Greater Bay Area. Some of the both not only the public sector with the Foreign Liaisons Office, working very closely with some of our members here in Web3 Harbor, have also allowed that dialogue to even extend into the mainland, to understand more about what it means to have a thriving virtual asset ecosystem here in Hong Kong and what it means for the overall economy, not just financial services. And so I think overall, when it comes to cross-border, when it comes to the way that the regulators have really encouraged and involved the community and ecosystem, and also taking the right speed and approach to ensure that consumer protections, again, are protected. And secondly, having the right amount of feedback when it comes to all different perspectives to be incorporated into the final policy work.
Yeah, that sounds very promising. So, seems like you have been working with the Hong Kong government for so long. Like, have you noticed there is something that you wish maybe there's more support in any areas? Is it like is there enough talent for crypto, the local crypto scene right here, or is there enough capital? Like, is there enough crypto projects locally? Do you spot if there's anything missing? What's the missing puzzle in Hong Kong right now?
I would say there's always room for improvement when it comes to the ability for international access to liquidity. I think the way that some of the regulatory frameworks are actually executed today will cause and has caused created silos of liquidity. And I don't think people across the spectrum would disagree with that. I think overall, the ability to have a conversation, which we have been having with various different elements of the regulators and also policymakers, have been very, very promising. So I'd say yes, we've identified some gaps when it comes to as simple as the interpretation of definitions, to as extensive as the ability for different types of products and services in terms of derivatives and clearing and settlement infrastructure, how that would result in solving some of these liquidity gaps. I think the fact that we're, again, having the conversation with regulators in a very progressive way is is something that Hong Kong has to be very, very proud of as a jurisdiction.
And other crypto hub that people like to draw comparison to is, of course, Singapore. So, from your own personal experience or from what you witness, like how does Hong Kong compare to Singapore right now? Because Singapore is so-called another crypto hub. Do you think that is true or not?
I mean, both are crypto hubs in their own different regards. Both have matured with the market. Both have experienced their fair share of situations such as frauds and exchanges maybe blowing up, or consumers being harmed by either malicious or inadvertent failures within controls and checks and balances on some of the ways that products have been launched and distributed to retail as well as institutional consumers, or investors. And so I'd say overall, just a generalization, what I've seen. Singapore offers you a flight manual on how to run a crypto business. And it is a very high bar to be able to receive licensing from them. And their licensing regime is focused on specific principles. Versus Hong Kong has created very open frameworks for stablecoin issuance, as well as soon to be OTC and separately OTC as well as custodial framework as well. And then the VATP regime over the last 2-3 years. And so again, that process is very open to consultation and very adaptive to the market. So look, I would say both have strong claims to being a crypto hub and a virtual assets hub. Again, Hong Kong does have a very large traditional capital markets infrastructure. And that is something that will continue to be one reason why Hong Kong is in the lead when it comes to virtual asset and crypto jurisdictional activities.
Yes, I like the last part, what you said a lot, especially like Hong Kong is in the lead, because like from my personal experience, the projects that I talked to, they almost got like scammed by the Singaporean government. So they moved out from Hong Kong to Singapore because like the government mentioned, okay, the regulation is going to be very friendly, but only to realize that it's being stifled is extremely really strict. So I'm seeing a huge flow of projects coming from Singapore back to Hong Kong. So another crypto hub, and let's focus on the whole APAC region. So another crypto hub is happen to be Vietnam. So there's massive growth potential in Web3, and I think you've spoken about that as well. So what sort of factors do you think Vietnam holds compared to other regions? Is it because the developer communities, the developer cultures is a lot stronger compared to other regions, or is there any specific reason, and how does that compare to Hong Kong's ecosystem?
Yeah, first of all, I'd probably like to start by saying that because we believe Vietnam is such a high potential growth market for crypto and just economic development in general, given not only the geopolitical situation but also the demographics, as you said. So much so that Web3 Harbor has been very dedicated in expanding a chapter through our local partners in Vietnam. To really help the local public sector understand what it takes to actually have a responsible, transparent, and scalable Web3 ecosystem. And so one of the first things that we've done is actually open sourced our blueprints. And we've done this in other jurisdictions as well, in Korea and also for the UAE, and even into Europe by our partnerships with Luxembourg. And so every jurisdiction looks at our blueprint and not only translates it from English, specifically for Hong Kong, but into the local language, so both regulators and lay people can actually understand what it means to have a thriving financial hub. But simultaneously, they can take the core framework, which is based on enablers as well as industry verticals, and what government policies in its most generic form can be used to promote a thriving virtual assets ecosystem. And getting back to Vietnam and answering your question even more explicitly, they have the ability to take the best and learn from mistakes across all jurisdictions. Because from 2019 until even 2018, in some jurisdictions, till today, we've had multiple different cycles and iterations of regulatory maturity. And now it's more of a canvas for Vietnam to say, oh, we will take this from Estonia in Kazakhstan, and we'll take this concept from Gift City, we'll take this concept from ADGM, this concept from FARA, this concept from Hong Kong, JFSA, etc., MAS, and really put together something that makes sense for Vietnam, which again is a high growth, young, and highly technical ecosystem with a unique position geopolitically and also economically. And I would say the way that the government has approached it is also similar to Hong Kong, very open in terms of trying to understand what the art of the possible is. They've also taken an approach very similar to the UAE, which created two competing IFCs, in which I'm actively helping both to understand what the value proposition of having a combination of international financial center with free trade components to really maximize the adoption and investment into the country when it comes to Web3 companies coming into those IFCs.
Yes, so when I look at the crypto adoption rate compared to all these countries around the whole world, like Vietnam is consistently sitting in the top 10 countries among the whole world, like for several years. So something I find it really impressive, and looks like the adoption rate is just going up in Vietnam. So perhaps we could learn something sitting in here in Hong Kong. And one thing you mentioned, I think, yeah, correct me if you're wrong. So you said everything would be tokenized. Like, what does that mean for everyday users? Does it mean, okay, we could buy tokenized gold, tokenized silver? Like, what does it mean from your perspective?
I would say I'd say everything everything that can be tokenized will be basically providing data. And it's the ability to use this data to create better experiences, as well as to reduce frictions when it comes to such as reporting for your income taxes and whatnot, to even your need to, when you open a bank account, you have to provide documents for KYC, KYB. When you have tokenized identity with tokenized data sources that are feeding off of composable networks and all of these different credentials in a public manner, it makes it a lot easier to create a better customer experience. And then using other technologies that are built on top, whether it's AI, cryptography, or other encryption methods, really protecting privacy, but also giving control back to the users and the investors and the consumers of their own data and how their data is actually being used. Tokenization of assets in general, look, so if you have a bad asset, tokenizing it doesn't make it any better. But what it does do is it allows better data to be extracted off of it. And when there's better data, there's more information. With more information, then you can create more products and services. So I do truly believe that tokenizing everything does have value, but again, for the right purpose. Tokenizing just for the sake of creating a financial instrument is not the only reason why you should tokenize.
I love that. And thanks for that clarification about the statement, everything will be tokenized. So are we moving towards the last segment of the interview? So I wonder what's next for you and Web3 Harbor. Is there anything we could look forward to?
Well, Web3 Harbor in 2026 will again be focused on our working groups and then creating more exciting, pointed content as well as experiences for our members. I think organically speaking, Web3 Harbor has morphed from mainly marquee events such as our Smart Contact series, which we bring a lot of international experts, chief and executives, key opinion leaders to talk about why they come to Hong Kong and why Web3 is important for Hong Kong, to now more grassroots activities related to policy work, related to talent development, and going back to the core of the blueprint, which really identifies, again, those 5 accelerators. How do we as a ecosystem and as the private sector really focus on committing on making these things a reality? So I think the next thing I would be extremely excited to talk about is moving away from the blueprint just being a financial services only blueprint, and then into looking at different economic verticals for Hong Kong. So we've now looked at creating the next version of the blueprint to start looking at how we can take the critical core recommendations of creating a thriving financial market when it comes to virtual assets and digital assets, but now applying it to mobility, transportation, healthcare, entertainment, education, and a series of other trade, logistics, manufacturing, and then seeing how these industry verticals can actually uptake and maximize their understanding and usage of both AI and Web3, but also for traditional Hong Kong companies that are either focused on real estate or even family offices, how they can actively participate in Hong Kong's transformation journey. So very, very excited about that.
Awesome. So for our viewers out there, if they want to know more about your perspectives on the local Hong Kong market or the local regime here, where's the best way to reach out to you? And from what I heard, you have a panel at Consensus here in Hong Kong, if I'm correct.
Yeah, that's correct. I'm actually going to be on multiple panels during Consensus and a few other speaking engagements. The best way is our Luma calendar at Web3 Harbor events. When you go to your Luma page, just search up Web3 Harbor. It'll be a very specific, tight group of curated events that are linked to our members. You can also find us. You can also find me on the Web3 Harbor website. So please go to web3harbor.org. And then there you'll see the executive team, the board members, and then my contact information is actually there to be able to reach out. So thank you so much for having me, and it was a great conversation today.
Yes, thanks for your time. So everyone, Jeffrey Chu, so the Executive Director at Web3 Harbor. Thanks for your time. We do have more show lined up here on Roxham TV, so do stick with us.
Thank you so much. Have a great day.